2025. Gonna be going over a lot. It's gonna be starting with my earnings update as a banker, retail banker. For those of you who may be new, I use that to branch off into what's going on in the banking system, what's going on in the financial system, and branching that out to the economy. So I have quite a few topics that I have documented here that I want to go over. And again, it's going to start with me just covering how I made out in commission earnings for February of 2025 and where I was kind of paid the most or incentivized the most, kind of branching that off into where banks are seeing the most opportunities. But on top of all of that, we're also going to be talking about the concern that banks and financial institutions have. Banks and financial institutions are at least functioning like they're really nervous, closing a lot of accounts. They're holding a lot of deposits and checks. A lot of the bigger banks are. And there's also a lot more denials going on than there were in the past couple of years or so. We're seeing an increase in tightening up when it comes to lending, even though rates have kind of come down. The political environment is really creating some stress and concern and a lot of instability in different ways. So we're just going to kind of tie all of this information in on this live stream. I know a lot of you, I did not get to promote this in advance, so I'm not really expecting a ton of you to come on live itself, but hopefully you tune into this replay and get this information. There will be a lot of information and personal insights, professional insights coming in on this live stream. So I want to kind of dive into the commission earnings for myself in February 2025. Essentially, the way I'm paid is in credits, and for credits, I achieved right at about 1,580 credits, which turns out into about $1,900 in basically cash incentive. Not bad, just short of $2,000 on top of my salary, on top of my benefits and everything else that and other forms of compensation I receive, bonuses, etc. So definitely not complaining. It was pretty solid. I reached over 120% of the goal that was laid out for me. So that's where I was able to basically earn some additional money on top of that versus just 100%. So I reached around $1,900 in commissions. I want to break down a little bit of a breakdown on where that largely came from. And I want to, again, tie that into what's going on in the banking system, how clients and everyday consumers and small businesses are functioning, how banks are treating the customers. Again, I want to branch out into all of that. So I'm going to do that by starting to go over where that commission earning broke down and took place. Okay. So big chunk of that came in from investment deals that I closed. I actually closed 3 of them out in February. They weren't that big. 2 of them were for $100,000. And the other one was basically a client that I already closed a larger deal on, $1 million deal on in the end of December of 2023, added about another $50,000 to their existing portfolio, which I was able to get paid on. So one of the areas that the bank has been focused on where they're compensating the most, like where their confidence is, because as I explained, they're already kind of nervous, but where their confidence lies right now is going to be around investments. I do think that the overall landscape is showing that the political environment, the policies that are being put in place are pro-growth, pro-business, pro-economics, pro-private market. These things tend to lead to increases in the overall equity markets, the asset markets in general, okay? So there's been a lot more incentive to me as a banker from the financial institution I work for around getting clients to invest. And there's been a lot more incentive to clients to invest, meaning bonuses and other offers, compensation for clients doing more business and investments, okay? So that's one major area where banks are showing more confidence, and at least especially the one I'm working for. They essentially put out a little bit more incentive around the investment side of things. So I did pretty good in that arena. Again, 3 different deals, 2 were brand new investment deals. One was an addition where a client added money to an existing investing deal. That area alone probably totaled out to around $800 or so, give or take. An incentive by itself was my investment deals. So when you look at the economic implications of that, where the banks are looking at this saying, you know, deposit rates are looking to come down and starting to come down and likely going to continue to come down, right? Deposit rates are coming down, and clients that have been in savings and CD accounts in particular are going to have to come out of those, because if you want to look at it and say the temperature's turning up, where those rates are coming down and you're getting less on your deposits. People don't have a ton of financial acumen per se, but they understand the concept of I was getting 5% then, I'm only getting 3.5% now. So that basically means they're looking for places to continue to get those returns or get decent returns. Banks know this, so they're incentivizing more clients as well as incentivizing us as financial professionals and bankers to help clients transition from deposit accounts, fixed rate, low risk, no risk deposit accounts over into the market, because that's where the opportunity is likely going. If the policies of the Federal Reserve and the policies of President Trump, et cetera, go into play, rates will come down. A lot of money that's been parked in cash, parked in money markets, parked in high yield savings accounts, parked in CDs is about to come off the sideline and have to get into the market if they want to be competitive on their earnings going forward. Banks know this, so they're getting ahead of it, and they're looking to make more. They're looking to put more incentive out there to the bankers as financial professionals, myself, as well as other individuals that are the clients that are looking to have to move that money around. So that's where a good portion of my earnings came into play. The next arena is going to be, interestingly, small business. Small business was a big one for me in February. I had multiple business accounts that I opened where clients actually put pretty decent deposits in, and I was paid on those accounts. So the way I'm paid when I open the business accounts in particular, if the clients deposit over a certain threshold, then I get paid on that account. If they don't, then I don't get paid on that account. I might get paid on other features and benefits that come with that account, but not the account itself. I had over 10 accounts where 10 different businesses of clients that came in to just my location, just me as a banker, and opened business accounts with $5,000, $10,000 plus in deposits, which was more than enough for me to get paid on. So where does this kind of tie into where banks are seeing confidence? I am being paid a little bit more than I was on the year prior for those business bank accounts, not by a ton, but there is more money being paid out to me by the bank for those business bank accounts. There are also significant bank account bonuses for those of you out there who catch this, that are in small business, looking to start a small business, freelancing and looking to incorporate yourself, etc. Banks are starting to put out more money towards business bank accounts, a lot more. And we're going to go into that later in the live stream about how that's going to tie into you getting funding for your business, etc. So hopefully, again, most of you probably will catch the replay. I don't expect a lot of traffic on the active live because I didn't get to promote this, but hopefully you catch the replay. I will be diving into how establishing your business bank account is going to be pivotal to getting funding for your business, because banks are leery as hell right now. So we're going to get into that later on in the live stream. But for now, I was paid pretty handsomely for business accounts in February that were funded, and banks were paying me well, and they're going to be paying my clients well on bank account bonuses. So we're talking about, hundreds of dollars, $300 to $500 on average, just for opening and funding a business bank account. That is pretty handsome, on top of the fact the bank is paying me more money for establishing those relationships. So I got paid handsomely there. I got paid really well for business credit cards as well in February. Those arenas alone probably added up to another $500 or $600 in incentives. So I did really well in that arena. I did really well in consumer credit cards. So all in all, not going through every line by line on my compensation, but again, I made about $1,900 in commission in February of 2025. And that was mostly around investments, business bank accounts, business credit cards, and consumer credit cards. Two of those three banks are paying more money on. They're paying more money to myself and the clients on the investment side, and they're doing the same thing on business deposit accounts, and they're paying handsomely on credit card rewards, welcome bonuses as well. So banks are a little bullish on small businesses. Banks are bullish on investments right now. I gave the breakdown a second ago on why investments. Again, deposit rate, the interest rates are likely going to drop. Even if they're being delayed, things can pivot and change, of course, but they're projected to come down. That is going to push a lot of people who have been comfortably saving on the sidelines and high yield savings accounts, CDs and money markets, out of those comfy deposit accounts into investment vehicles to get those returns. That having been said, that is going to force a lot of individuals to have to reevaluate their finances, and banks are trying to incentivize them to do so by offering them more money to invest. They're paying us as bankers more money to encourage you to invest, to guide you to invest, because they see that as the opportunity going forward. The next thing is the business banking side. Banks see a deregulatory environment from President Trump, where they're going to be a lot more deregulating going on. There's going to be an increased effort around opening up lending capacity for banks, for businesses of all sizes, and there's looking to be tax cuts for businesses of all sizes. So if these things come into play, banks are looking at it saying it's going to be a great, friendly environment to do business. Rates coming down, lending kicking up, deregulation kicking in, tax cuts kicking in. This can all lead to a very healthy environment for businesses. Banks want to get in on that, so they're incentivizing more business banking relationships. They're incentivizing us as financial professionals and bankers to pay more money, paying us more money to establish these relationships and encourage these relationships. So that's a breakdown, a quick breakdown on where my incentive went down on commissions and how that's playing out and where the confidence is for banks. And this is, again, kind of larger financial institutions that I'm talking about here. Smaller banks, it could be a different story. Anybody that's coming in new, please let me know you're in the building. Let me know. I'm doing this from my phone. It's not from my laptop, so I may not be able to see your chat. If you got any questions, or if you drop a super chat, hopefully it'll pop up. I will be getting to this at the end of the live stream, so just hang tight. If you are joining, let me know you're in the building. Let me know any questions. Leave your super chats. You have the ability now to do super chats. You can leave those in. I will get to them at the end of the live stream. I want to try to get this information out so I can make sure that the replay is digestible and I'm not doing a bunch of breaks. Okay. So shout out to y'all for joining in. I appreciate every single one of y'all that's tuning in slowly but surely and leaving likes. Please leave a like when you come in the door. Other than that, so how is the bank responding otherwise? We talked about the bank being more bullish towards investments, coming out of deposit accounts into investments as rate changes are kicking in. We talked about banks feeling like small business and medium and larger size businesses will be in a more friendly environment, most likely, if the policies that have been proposed get put into play. What else is happening in the other lines of business, right? Consumer deposits, business deposits, consumer lending, business lending, mortgages, credit cards, business credit cards. How are all of these different lines of businesses being affected so far in the first 60 to 65 days of the administration and the new environment that we're in going into the first quarter of 2025? As I already explained, there are a lot of incentives around establishing new consumer and business deposit accounts. Banks are putting out a lot of bonus offers. The bank I'm working for is putting out more bonus offers. So there's more focus on business banking relationships, consumer and small business. Again, stay focused, because towards the end of this or further down the line of this, I'm going to explain that towards getting funding and qualify for your applications and lending. And stay focused, because I also want to address, it's not just in the title for the hell of it. I want to address banks closing accounts, banks ending relationships, banks holding checks, holding your deposits, holding your transfers. I want to talk about all of that. So just stay locked in with me as you join. If you're catching the replay, just stay focused. I'm going to get to all of that. Banks are incentivizing more relationships, more bonuses on relationships. If you're coming in live, please leave a like, leave your super chats, leave your comments. If you got any super chats, I'm going to get to them towards the end of the live stream. Banks are looking to encourage more deposits. They're incentivizing credit cards on a personal and business side. Bonuses are looking healthy in that arena. There's no tapering back on that. Banks that have investment wings or investment conglomerates under their umbrella and investment firms, they are transitioning their clients from deposits to the investment side. Business lending is changing. I'm going to get into a whole separate segment about that in a minute, but it is changing because policy shifts, potential policy changes, the intention of where the environment is supposed to go versus where the environment is, and the risk that can come along with the policies that are being put in place. Mortgage lending is changing. Talk about that briefly in a second. Mortgage lending is shifting a little bit. Where is that headed? if you're looking for primary residence, and we'll talk a little bit about real estate investing. If you're in that arena, you have interest there, we're going to dabble into that. How policy changes, the current administration is looking at it, and the risk of interest rate changes or the opportunity of interest rate changes. Also going to talk about relationship banking. We're going to also throw in a BOI reporting update as well. That has changed. The BOI reporting has yet again updated. So when it comes to lines of business, banks are encouraging deposits. Banks are encouraging relationship building. Banks are indeed encouraging you around credit cards. They're not slowing down with welcome offers. They're not slowing down with getting more creative on what they're offering on their credit card products. They're not getting leery on 0%. All of these things are alive and churning for consumer and business credit cards. I am getting paid a little bit the same or a little bit better on these lines of business from that end of the spectrum. The environment is also shifting around business lending. Let's go ahead and just dive into business lending for a second. What I'm experiencing at my financial institution with business lending is they are getting very, very, very leery. If you are not familiar, if you are not banking with them already, if you are not already well established as a business, then it is not a very friendly environment for you, my friend. If you're leaning on just good credit, if you're trying to do the whole business credit stacking situation where you build a bunch of business trade lines and you're doing it without business banking relationships, it's not going to be an easy environment for you to function in. Banks are not going for it at the moment. They're coming out of an environment where rates were higher and lending was tightening up already. They're coming from that into an environment where that's still the case, where rates are still high, and you have a situation where lending is still tight, and now you have more uncertainty due to policy. Due to Trump's economic policies, there's a lot of uncertainty on what will get passed and the effects of things when they get passed. This is very important. Why? Because banks don't like uncertainty, and they damn sure don't like to lend in an uncertain environment. So what happens is they funnel most of their lending into familiar clients. People who are already well established are probably going to still get access to capital without a hell of a lot of scrutiny. As long as if they have their business banking relationships already there, they've been established for multiple years, things are looking stable and consistent. There's not big fluctuations in your credit score and your FICO scores and your revenue shifts where you're not making as much money. Any of the founding pillars to lending to you, to underwriting you are not changing, then they're likely lending to you. Your applications are likely being approved. But if you are new, if you don't have strong banking relationships, if you don't have consistent credit, if you don't not only have good credit, but consistent credit scores, if you don't not only have good revenue, but consistent revenue, that inconsistency will lead to very heavy scrutiny on your applications as a borrower on the business side. So I'm going to cover that really quickly with you. The environment is not looking very comfortable. It could change. President Trump's policies are intended. I see y'all leaving likes as y'all starting to come in. I appreciate y'all. Y'all have the ability to super chat. If you have questions, I will get to them as well. I'm doing this from my phone and not my laptop, so I can't really see your chats and stuff on the screen. I'm basically looking at the mobile version, but I'm going to continue on. So basically what's happening is President Trump wants to deregulate businesses in the financial sector. He wants to inspire a whole new wave of lending. He wants to make it easier for businesses to do business. He wants to tax businesses less. He wants to put tax benefits in the hands of consumers. He wants to put it in the hands of workers to put more money in their pocket. He wants interest rates to go down to increase activity and to increase lending. He wants to deregulate to make it easier to do business. You already see what's happening in the DEI situation. This was hindering a lot of larger and mid-sized businesses from doing business the way they wanted to. Whether you agree or disagree, this is a version of deregulation. This is a way to make doing business more feasible, less strenuous, more friendly. That is leading to promise of an environment that will lead to greater lending. He wants interest rates to come down. He's putting pressure on the Federal Reserve, and he's also implementing policies that will, in his mind, in his administration, in his cabinet's mind, pull down interest rates, which also should be friendly for lending. What should you do if you're a business owner looking to get access to capital right now, or an aspiring business owner looking to get access to capital right now? What do you need? General framework at the time of this recording right now is of March of 2025. You need an established business, ideally, unless you're going to go for business credit cards. Then you can lean on personal guarantees and good personal credit, and decent reported or stated income and projected revenues. Business credit cards are moderately attainable at the moment. There could be more scrutiny on, verifying documentation in that arena. So be mindful of that. Don't think it's going to be the environment it was a couple of years ago, where if you had a pulse and a decent credit score, you was getting $15,000, $20,000, $25,000 approvals. That's not the case right now. You may not have to put out docs and stuff like that, but you may be in a situation where you're forced to just do other authentications or other verifications or verifying stuff you put down in your applications. Your approvals could be lower. Depending on the financial institution, there could be a lot more scrutiny on your applications in that arena. But business credit cards could still be accessible without documentation if you are a business owner looking to get access to some kind of cash flow management or financing tool or funding tool. This is still available, okay? So that having been said, business credit cards are the first barrier to entry or your first access point. They're still available, not as fluid and loose as they were months ago, okay? Or years ago, a couple years ago. There's a lot more tension around that, but it's still accessible. Next layer up is going to be loans, lines of credit. These are still available by some financial institutions that are doing them up to certain thresholds of no doc. $25,000, $50,000, no doc. If you got good projected revenues, good personal credit, personal guarantee is going to be the backbone of all of it right now for the most part. And business banking relationships. That is where this is headed right now, people. Business banking relationships going to be essential. Having an internal look for the internal relationship, the bank can look in and see revenues, in and outflows, all of the things documentation wise they would normally ask you for is in your bank account. Most of your tax return, cash flow management, financial statements, most of that information is embedded in your banking transactions. So what better way to make the bank more comfortable than to have a business banking relationship with them? So if you're going in for funding, you're looking for lines, loans and lines, and things of this nature, start a banking relationship, fund the banking relationship, operate that banking relationship for 2, 3, 4 months, 6 months out. I'm telling you right now, going in and rushing straight into applying at these banks just because your credit score is good, or maybe you got some business credit trade lines built up, is not that type of environment, ladies and gentlemen. It's not. You need to go in creating trusts, build a banking relationship, take advantage of the bank account bonus offers, put decent deposits in if you can afford to do so, and wait out 3 months, 5 months, 6 months before you charge in for any significant bank lending products. And if you're going to go for beyond that $25,000, $50,000 threshold, be prepared to supply documentation for sure. Be prepared to supply documentation. It is that kind of environment at the time of this recording. Could change if these policies go into place and things are more stable. It could change. But I'm telling you right now, at the end of the day, Wayne, my guy, I see you in the building. Israel, I see you in the building, checking in. I see you, good man. I see you, my good sir. Thank y'all for checking in. Thank y'all for leaving y'all likes. Again, if you guys want to support, there's super chats available. If you got your questions, of course, I'll answer some of your questions for free as well. But there's an opportunity to support the channel with super chats and supers. Y'all tap into that as well. But it's good to see y'all gentlemen returning in. So business funding is still available. It is a hell of a lot tighter. Now, moving along from that, if y'all got any questions around the business lending, business funding, y'all drop that in the chat. I'll try to check in on those as well. Moving in, we need to talk about banks putting your deposits on hold, closing your accounts, restricting your accounts, holding your transfers. Like, what's going on? Banks are scrambling in this department. The big banks that have the ability to do it are creating a lot of holds on your check deposits, on your transfers, your in and out flows, your Zelles. These things, they're closing and restricting accounts like crazy. I am seeing it firsthand because I'm stuck helping my clients untangle this mess, and some of them I am not able to save. You have to watch how you're transacting in your accounts. The bank is leery as hell. The banks are leery as hell in this current economic environment, and they're also taking massive losses on fraud. Zelle fraud is through the roof. Check fraud through the roof. These things are real. They are taking billions of dollars in losses on these transactions, and they are willing to make your life uncomfortable to mitigate these losses, people. When you are doing your bank transfers and deposits, especially if the relationship is new, if you are less than 6 months, 6 months, 90 days in, and you're doing a lot of Zelles, you're doing a lot of check deposits that, are coming, you're like depositing a check on the behalf of somebody else, or you're doing large, not on the bank transactions, deposits. Put it in English. You're putting in a check deposit for a large amount that's not drawn on the bank you're doing a deposit in. You're doing all of these inflow transfers or outflow transfers of high dollar amounts, and you're new. You're going to have problems with the banks. They're going to freeze your accounts. They're going to restrict your transactions. They're going to lock you out. They're going to force verification if you're doing crazy ATM transactions. Hell, if you're doing normal ATM transactions, the banks are going to be leery. They're going to be leery. They're going to put you through it. If they have the technology and the infrastructure to do it, they're going to put you through it. They're going to put you through it. They're going to hold. So what can you do to mitigate this? Have a long-standing, decent relationship with that bank. Monitor your in and out flows. Don't do a bunch of back-to-back transactions. Don't do finicky check transactions. Don't put in these law. If you can avoid it, don't do these abnormal transactions if you can avoid it. If you are going to do them, connect with your bankers. Develop your banking relationships and connect with your bankers. Sit down with your bankers and let them know in advance, or let them know at the time, this is what I'm about to do. How should I proceed to minimize holds, restrictions, and potential closures where my money's tied up? In some cases, you might not even get your damn money back if it's a bad Zelle transaction. You need to communicate with your bank to try to mitigate. They are nervous right now, and they are not interested in taking these losses. I'm telling you, they are willing to forego the relationship of, your customer service, your potential relationship to mitigate losses. It's real out here right now. Accounts getting closed left and right, scams left and right, fraud, Zelle fraud, check fraud, wire fraud is crazy right now. I am telling you, it is insane right now. Don't sleep on it. It's real. I'm telling you, it's real. Don't get caught in a situation where you're getting overdraft fees, your money is getting tied up for weeks or months, your accounts are getting closed, the transactions that you're used to having to go in and out of your accounts, like your auto debits are getting messed up. Be mindful of how you're doing business with the banks, because the banks are being very leery to any suspicious activity right now. Establish strong relationships and have sensible transactions. Communicate with the bank in advance if you're going to be doing something anywhere near borderline finicky. That is the short-term, compressed response to what's going on right now. Like, you're seeing it, headlines everywhere. This bank, Bank of America, Chase, Wells Fargo, closing accounts, freezing accounts, restricting transactions. The Zelle situation is going crazy where people are being frauded out of their Zelles. They're finessing you by sending you text messages, calling you, and pretending to be your bank and doing a damn good job of it. Definitely hit that like button, y'all. Appreciate you. Definitely hit that like button. Definitely. Listen, it's getting real out here. And you have to be mindful. Banks, as they have more technology and they have a broader customer base, they are willing to risk your relationship to mitigate these losses. I'm seeing it left and right. Literally termination of relationship. You'll get your money in the mail in 2 to 3 weeks. Like, really? And you may not have done anything wrong, but it just looked fraudulent. It looked similar to a fraudulent transaction. You have to separate yourself from the people doing fraud by moving slower, communicating more in advance, and communicating at the time of the transaction. As far as check deposit holds, you need to find out where you're getting your money from, communicate with who made the check out from you, and make sure that they are clear to go on their end. If it is not drawn on a bank you're doing a deposit at, then you need to work on considering going to the bank that actually the check is drawn on. If that's not realistic for you, be prepared for holds. Be prepared for that money to be on hold. Don't go in there and walk in with these checks thinking that, oh, I'm gonna walk in with this X amount of dollar check and I'm gonna walk out cashing it, or I'm gonna put deposit, I'm gonna be able to draw on it immediately. Not gonna happen, fam. They're gonna want to hold those funds for at least a couple of days, potentially a week, potentially 2 weeks, depending on how new your relationship is, how abnormal the transaction is, how large the check is. Be prepared for holds. Get ahead of it by either having that person send the money a different way, go to the bank the money is drawn on, or make sure that you have a strong relationship with that bank and they have a relationship with you where they're willing to negotiate releasing those funds sooner. Get ahead of the curve. Don't tie up your cash flow and mess up your account by trying to just think you're going to go over there and cash these checks or deposit these checks with no recourse or no obstacles or no hurdles. It's not a thing. It's not a thing. A lot of unease, a lot of concern, and a lot of apprehension by these banks. Okay, relationship banking is key for bank deposits and transactions, for lending, for access to capital. Relationship banking is essential right now. Essential. Make sure that you have good relationship with your banks, because this is familiarity with them that is going to allow them to do business with you friendlier, more fluidity, less hassle. Okay. Don't just go around bank to bank, establishing new accounts. Be mindful of your check systems. You're running around opening a bunch of different accounts. Not a good idea. Not a good idea. Be mindful right now. Banks are leery, and there's a lot of people doing fraud that are trying to disguise themselves as everyday clients and business clients like you. Moving on to home lending really quick. Then we're going to go into the BOI filing situation and the general overall economic update. And then we're going to get out of here. All right. So mortgage lending, as you can see, that environment is still chaotic. We're running into a situation where rates are staying high because of the way the bond market is responding. Even though the Federal Reserve has dropped rates, the bond market and the 10-year Treasury yield that more directly affects mortgage rates is going up. That is created an environment where you're seeing still a compressed transactional living in the mortgage industry, but moderate upticks in different markets. You're still seeing overall appreciation in many markets, but you do have compression in other real estate markets, like where I'm at in New Orleans metro area. We are generally being hit harder by the interest rate environment and the real estate transaction compression, right? So basically where the real estate market in my arena has dropped off, transactions have dropped off, pricing is coming with it, properties are sitting on the market longer. So if you are in position as a cash buyer, as a real estate investor, or a really well-positioned primary residence buyer, you could be in a situation where there's opportunity for you. There could be real opportunity for you, because in my market and in some markets around the country, things are cooling down significantly. Doesn't mean that there's going to be a complete steal, but you will have your homeowners who are in desperate situations, who need to make deals. You will have some people who are just tired of sitting on the market and ready to negotiate, who weren't originally in their first 30 to 60 days. So if you're looking for a primary residence, if you're looking for real estate investment deals, you can kind of come to the primary market and find some opportunities, because rates have not budged. Even though rates have come down by the Fed's terms, they have not really come down by the mortgage rate terms. The next thing I want to talk about is creative financing and some of the back-end financing options for real estate investing. Not going to spend a ton of time because that's not really what the video is, the live stream is about. But of course, y'all, those of you who are familiar, y'all know I like to touch a broad market when it comes to the broad topics of the overall landscape for investing, real estate investing, banking, etc. So there are a lot of creative products that are coming out for DSCR. There's a lot of opportunity for lenders that are doing collaborative opportunities with seller financing, meaning the lenders putting in some money, working with the seller to put in some money to, carry and do a seller carry. And then you put in 5, 10, 20, 15, 20%. So maybe 50% is covered by the lender. Maybe the borrower is carrying 40, 50%, but getting the other 50% in cash from the lender, if that makes sense. And then you got to put 10% down. So there's a lot of different creative financing opportunities coming in that, I'm watching from my colleagues and the connections I have in the lending space, as well as studying other, really good YouTube channels like One Rental at a Time with Michael Zuber and his people putting out good content around like what they're calling the 50-40-10, where 50% comes from a lender, maybe DSCR style type of situation. 40% is being carried by the seller, but the 50% for the lender is going into the seller's pocket. So they're getting cash and getting financing on the back end. And then you're putting 10% in. Win-win-win, because the lender's getting in on the deal, seller's getting to carry some of the note, but getting cash in their pocket. You only have to put 10% down, and you're still probably getting a discount on a really good deal. Everybody's getting in on the deal and doing pretty good on those types of numbers. Creative financing is active right now. Hard money lending, private lending, creative lending is available because the mainstream mortgage market is still tough. It's still very tough. So properties are sitting longer, and that is creating a situation where mortgage transactional activity is dropping, and the back-end lenders who have the flexibility to play around with their products, play around with the interest rates, and play around with the creativity of their products, and sellers are getting more. I'm seeing more sellers coming out on a primary market on like Zillow talking about being willing to finance some of the deal. So very powerful stuff in that arena. If you're in the mortgage market as a primary buyer, or if you're in the mortgage market as a real estate investor, tremendous opportunity is sticking in there. It's snuck in there if you know how to find it, and find distressed properties or find buyers who are just getting, tired. They're getting fatigued sitting on the market, and partner that with good banks and lenders that are doing creative financing deals. You can come up with some great deals in the market. So that is the quick cap or quick update on the mortgage market, the lending market that I'm seeing directly, as well as hearing from quality, sources and content creators. Now, closing out on the BOI filing real quick for all of my business owners, for all of my aspiring business owners. If you just happen to have LLCs and corporations you haven't brought to life, but you created them, but you haven't brought them to life for the active business, whatever the case may be, if the BOI business owner interest filing is relevant to you, the Corporate Transparency Act is relevant for you. I put out a really quick video a few days ago showing that it has met another delay. And now since then, in the last couple of days, the BOI filing has run into a complete wall. So the Treasury has come out saying that they don't plan on enforcing the law around the BOI filing, meaning that the Corporate Transparency Act is put into law, but they don't plan on enforcing penalties and putting in, deadlines and things of that nature. So a really important update around that. It's looking like it is on life support a little bit. I'm not going to say it's gone, because there's still judicial processing around this and things going on where this has been weighed out. So I'm not going to tell you that it's gone, but it is definitely taking some serious blows as the Trump administration is finally coming out and pushing against it. They hadn't up to this point in time. And so it was meeting more local and regional resistance. Now the Trump administration and his Treasury has come out and said, hey, we are not supporting this. We're not enforcing the law on this. We're not really in favor of this. This is intrusive. It is unconstitutional, etc. So just a quick update on the BOI filing. Not looking good for it, but I would be mindful that it is something that is not dead and could come roaring back later. Hopefully it goes away. I'm not in favor of the BOI filing, the Corporate Transparency Act. I think that if it is going to be in place, it should be as it's being enforced right now, or looked at right now, where it should be for like foreign entities or other entities that are more obscure. Us everyday LLCs and corporations and mom and pops and single member LLCs and 3 or 4 partner LLCs, we're too damn small. It's too damn easy to tell who filed it for us to have to do this personal information filing for no reason to the government. All right. So I'm not in favor of that. That is the BOI update right now. It is meeting some resistance. The U.S. Treasury, the Trump's Treasury is not supporting it, not enforcing it at the time of this recording. So if you happen to catch this and the BOI filing is relevant for you, that has been the latest as you may have run across. You may not have run across. It's maybe news to you. The March deadline that was put in place is also looking finicky and look like it's no longer in place based on FinCEN themselves and the U.S. Treasury saying they ain't rocking with it too much. So that is kind of the latest overall update on things. I don't see any questions that I can see in the chat. So I'm going to get ready to wrap this up. I appreciate all of my pioneers that tuned in. I love you guys staying locked in and continue to get value from this content. The replay will be out. Y'all push this replay out. You know, Wayne, my guys, Israel, all of you guys that catch this and all of my familiars, anybody in my faith, push this out. Let's support this with likes on the replay, comments on the replay, good information in here, good updates in here. Let's get this out to the general public. Any of y'all as the last final updates, couple things. The channel has grown and reached the first level of monetization where we can do supers now. So if you want to continue to support the channel and put that out there as a tip, or if you want to do super chats, that is an opportunity for you to support the channel. I am also branched out onto Instagram. I'm pushing out slowly but surely on the social medias. Instagram will branch out to X, so on and so forth. Right now I'm on Instagram. The handles will probably be in the description for Blueprint 4 on there, Blueprint IV, of course. And I'm personally on Instagram. You will find that JPIV as well. The handles will be in the description. Let me know you're coming for the channel, and I'll definitely let y'all in on that so we can continue to grow our connection on the other social media platforms. Other than that, I don't see any additional questions. Thank you, Israel. I'm grateful that you got value from it, my man. If you didn't have any additional questions, I appreciate you for tuning in. As always, y'all know I'm not going to waste a dime of y'all time. I come on here with intent to drop real value every time. So I'm grateful for y'all taking the time, trusting me with y'all time, knowing that I'm going to bring y'all some real quality information every single time, like always. A lot of new videos going to be coming out. I will be getting back to my live streams on a monthly basis, maybe even every other week basis, giving you updates on my earnings, giving you updates on what's going on in the banking and the financial services, the lending, and the overall economy. I'm not going to stop. I'm not going to slow down. So y'all stay locked in. More content coming out soon. If there's not any questions, I don't see anything coming in. If there is any, if there are any questions, leave it on the replay as that comes out. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon. Ah.